security markets. They're incredible. A lot of people spend their entire life, their career, working on them. A lot of them sit down there, they make a lot of money. A lot of people lose a lot of money. A lot of people have massive heart attacks over the security markets. Oh my gosh, what's going to happen the next day? I'm not exaggerating. People get up in the wee hours of the morning. They work on things from 4 o'clock in the morning to 11 o'clock at night, working the New York Stock Exchange, working the one in Tokyo, working the one in India. They do it across the entire planet. Everybody gets into it, and it's almost addictive. It's got its own different fragrance to it because people pursue it passionately. One of the greatest ones of all is Warren Buffett. You know what? He's only worth a little bit of money. They say he's only worth about $80 billion. No big deal. But his stock, that his own company, that really goes through and they have a giant conglomerate where they buy stock in companies for a major part of their corporation. The stock price just topped $423,000 a share. Yes, that's how valuable it is. So if anybody deserves to have their picture on the front of the function of the security markets, it's got to be Warren Buffett. When you look on the different aspects of security markets, there's a lot of different things. They assist businesses in getting long-term funding to finance their capital needs and their expansion needs, even their operational needs. It also has another market out here where private investors can buy and sell securities like stocks and bonds. So it's a way to get money, a way to sit down and invest money. It really has multiple different functions, and a lot of people spend their entire career, their entire livelihood in the securities market. There's all kinds of opportunities out there. There's different aspects. We go out in different ways to measure it. We're going to talk about the basics of this. If you want to dive into this market, listen to what we have here, and then go specialize in the process, because you can make a lot of money. And you can lose a lot of money just as well. It's a volatile market. There's all kinds of pitfalls out there in the process. You can be on top of cloud nine, all over the place, wealthy beyond belief, and the next day you're poor, back in the doghouse, and the dog doesn't even like you. So that being said, the functions of the security markets is multiple. One of them is if the stock goes up, let's say Warren Buffett's company, Berkshire Hathaway, it goes up. Does that mean that the company gets more money? No. The stock itself, the stock price has no impact on the company itself. The stock price has a huge impact on the investors in the company. So, for instance, if I go and let's pretend that I can actually buy 1 share of stock in Berkshire Hathaway. By the way, I can't. I'm just a college professor. Okay, but let's pretend that I can buy 1 share of stock. So I'm going to watch that market, and if the market, if it goes up and up and up, then I can sell the money and I have value. I have cash value. Although I don't have any value unless I sell the security, then the money comes back to me. So really, it's a paper gain. And by paper gain, I mean it just shows up on a spreadsheet rather than being a real different change in my assets. If the stock goes down, okay, then once again, I have a paper loss. If I sell it when it goes down, let's pretend it goes down to $390,000 a share. Oh my gosh, the world would end. Nobody on the planet has stock selling for $390,000 a share. But that being said, let's pretend that actually happened. If it dropped down, I would have a paper loss, but I wouldn't have a real loss until I sold it. So a lot of people, they panic over changes in the stock market. It goes up and down. It's a roller coaster as it goes through, but you don't really have a loss and you don't really have a gain until you sell the stock as you go through. A company only makes money for itself when they have an initial public offering. IPO. Whenever you hear the word IPO, people, their pulse races because it's so exciting. Something new. I can make my fortune over here. You can't make a fortune unless you can buy the stock, and they only sell stock in big blocks, usually well beyond the ability of an individual investor. So an IPO is when a company sells stock. If they sell the stock, let's say they sell 12 million shares at $20 a share, okay, they're going to sell the 12 million times 20, and that's how much money they're going to sit down and make. So 12 million, okay, that's $240 million if they sell it at that price, and all of a sudden, boom, they have a huge windfall of capital inside the company. Investors have a huge potential windfall in buying the stock, and that stock is going to go up. A lot of times, just going through and issuing the IPO brings the stock up to higher market expectations. Although sometimes you may buy for $20 a share and it goes down to $15 a share. And then you have to wait and sit down there and pay attention to the divine intervention. And hopefully somebody will listen to you and your stock goes up in the process. So that being said, there's a large group of people. There's two major groups out there. We call them investment bankers. And these are people that specialize in the issue and sale of new securities. So that they have an entire living, and they really push the aspect of IPO. They cheer that on, and they make a lot of money in the process. You also have institutional investors like pension fund, mutual funds, insurance companies. There are huge investors that go out, and we're going to talk about them later on because they can be dangerous critters for you that are out there individually in the process. So those are the two big players when it comes down to IPOs. And so if you're a CEO and you want to go public and you want that $240 million in your back pocket to spend and go wild and buy a brand new building and, of course, a brand new car for you in your garage, you want to sit down and have an IPO, but you have a court. Sometimes it's 10 to 18 months from initial beginning to the end of actually selling the IPO. It takes a long time. There's a secret tool out there we'll talk about shortly. A couple things. The stock exchange where you sell it, probably the biggest part of the market is called the OTC, or the over-the-counter OTC market. That means the stocks that they're traded, but they're not listed on the national exchange. But there's a lot of them out there. A lot of small companies go out and they go public. They have an IPO. No, it's not big. No, you haven't heard their name because they're brand new. And all these companies on the stock exchange had to start someplace. So it's over the counter. The biggest system that does it is called NASDAQ, NASDAQ. It's a national system for over-the-counter trades as you go through. The biggest system is actually the New York Stock Exchange. It's the largest floor-based exchange in the world, and it's always been a hub of activity. You'll see in the top right how it was before computers took over a lot of the training, and on the left you'll see them after the computers took over. They've been replaced by artificial intelligence or online banking as you process. So here's a couple of things on this topic exchange. You'll see them across the entire planet. Here are the biggest ones. Just about every country that wants to sit down there and build its capital investment, because as you recall, entrepreneurship is one of the 5 factors of production. You really need to have investors and people with wealth in your company, in your country, to sit down and drive your market to be able to fund projects to go through. But the biggest stock exchanges, New York Stock Exchange, the NASDAQ, the Japan Exchange Group, the London Stock Exchange, the Shanghai Stock Exchange, and the Hong Kong Stock Exchange. There's also dozens of others out there that range across the entire planet. Just about every country has some form of a stock exchange. So keep these terms in mind. Know what a stock is. Know what it's not a binds, it's a bonds, IPOs, OTC for over the counter, the NASDAQ, New York Stock Exchange, and what an institutional investor is. Take care.